I've got Victor Adair live from the trading desk. Victor, a couple of things I want to get to right away. We got a 20,000 Dow. That was something. But I want to come back to what Jack Crooks and I were discussing here before we had the technical problem, and that is about interest rates and your take on the interest rates. Because I think, you've been telling us for quite a while that that's a real key to watch.
Sure, and we think that the interest rate market is absolutely the key to everything here. Bear in mind, July of last year, just after the Brexit, we had interest rates like around the world at historic lows. In some cases, go back hundreds of years. But since then, we've seen interest rates rise, whether it's short-term interest rates, longer-term interest rates, and that has had certainly an effect on the markets. The key thing here, of course, is, where do we go from here? Guys like Gary Shilling are going to really make the academic case for what Jack was just saying, that there is so much debt out there, the economies are so, let's say, just barely, keeping the nose above water, that it's going to be impossible for rates to go higher, and rates will probably go lower. That's one school of thought. I really don't know, but I'll tell you this. Here's my thought. The markets are absolutely unprepared if interest rates go higher. And I would say that unpreparedness would accelerate the rates going higher. The whole world has been reaching for yield in one way or another, and that's because interest rates have been so low. If interest rates start to rise, there will be a lot of unraveling or unwinding of all kinds of trades all across asset classes. So, it'll be important. You got to watch it, and there's big arguments from really bright people on both sides who say, this is going to happen, that's going to happen. So as a trader, I just kind of watch. I've seen the last couple of weeks, interest rates are creeping higher again.
Well, I love what you've told us before, that you said you didn't have any special insight in handicapping that election, handicapping the results and the policies that Mr. Trump's going to put in. But we saw, and again, you've been chronicling, in 6 weeks we've been doing not much in the markets until we hit this week and we get above that 20,000. What's your take on that?
I mean, the stock market in America really went sideways in a pretty narrow band for 6 weeks, as you say. We did break out to the upside. Talking to my floor brokers down in Chicago, the guys were saying, but the volume was miserable. And if we listen to Mark Leibovitz, who says volume leads price, so, in other words, this breakout to new highs to the guys on the floor wasn't that significant because it was not a big surge of volume. It was just like, okay, we did it, no big deal. Drew and I have been very cautious with our trading since before the election. I couldn't handicap the election. Trump, let's call him the new kid on the block. He's like an unknown quantity. And I see this choppiness in the markets day to day. And you just don't know what he's going to do next, and it does have an effect on markets. This executive order that he just put out yesterday, we're having the head of Google, head of Facebook come out and saying, are you crazy, in effect? Okay? This is not a good idea. I think the markets in some respects are wondering when the law of unintended consequences are going to catch up with some of this unpredictable behavior.
Well, yeah, and actually that's great news for you as a trader. You watch it every day. Hey, Vic, I got a minute to ask you about your take on the crude oil.
Crude oil, we remain short of crude oil, but again, we got kind of a modest position on there. The crude oil has traded in a range. This is like the March contract, okay? It's traded between $52 and $54 for the last 3 weeks. That's a very tight range compared to kind of the violent market swings we've seen over the past couple of years. The speculative bets, in other words, bullish speculative bets made by speculators in the futures markets have gotten even larger. They're already historically huge. There is these massive bets being made that we've got a bottom in place in crude and prices will go higher. If there's disappointment on that and prices start to go down, then these guys are going to start throwing in the towel, and we'll put pressure to the market to the downside. So I like Joseph Schachter's arguments, and he's going to be at the WOC. You want to hear what he has to say, but I know Joseph remains bearish on crude. We like his arguments, so we're tilted that way.
Well, I am also looking forward to hearing what Joseph Schachter has to say. That's another example of why this is such an interesting time. I mean, it's Mr. Trump you've alluded to, changes in the stock market, changes in the global economy. The list is a long one, Vic. I look forward to seeing you there, and I invite people to come and visit with Victor when we're at the World Outlook. Thanks for taking the time.
Great to talk with you, Mike.